Okay, hello traders and welcome to Market Blues. It's still Napan here, founder of Master of Markets, Elite Traders Conference and the Traders Open Day. So today's topic is one of the biggest ones, which for most traders is either going to be fear or greed, which actually stops or inhibits or stops them from getting to their peak performance level. So today's topic is going to be on fear, okay, and 3 steps on how fear is actually 3 reasons for fear, basically. That's the title for today. And as you know, Market Blues is all about keeping you at the peak performance state at the start of the week, because it's very critical for us traders to always be at our peak state to give our peak performance, because the fluctuations and the price fluctuations are so immediate that it can really affect us, and we must start doing things that is not according to our trading plan. So it is so critical for us to be in focus. So let's take a look at today's topic on 3 reasons for fear. Right, so let me just share my screen over here, and there we are. Now let me just annotate as we usually do, and then we can describe it and we can look at it as well. After I have looked at this for today, then we can also look into the markets as well later on. Okay, what are the 3 reasons for fear? Now, the first thing is, before I give you the 3 reasons, the first thing to do would be probably to figure out and understand what really is fear. Okay, most of us understand that, we feel it, but what is it? In some literature, it has been discussed and defined as basically false expectations appearing real. Okay, that's what some literature has defined that as. False expectations appearing real. That means it's not really real, it's not really true, but because in the context of where it's appearing, it becomes false. We'll explore into this as we go through the 3 reasons. So now let's take a look at the number 1 reason for creating fear, especially in relation to the trading field. The first thing we would say, when it's been polled by thousands and thousands of traders, the first thing that creates fear is the strategy. They are not very confident in their strategy's edge. Okay, the strategy edge. And that's what creates the fear, because as you see, traders, if you're in a trade, for example, let's go on to the 1 hour over here. If you're in a trade and you're holding this long position here, but then it starts to go against you, a fear will start to come to you, saying that, hey, is it going to come and eat up all my profits, or is it going to turn around and going to carry on further? At this point over here, as it's going up, you might be thinking, oh, hang on a minute, is this really going to continue, or is it going to then come back further down and eat up all my profits, and I'm going to turn into a realized loss? How do you actually tackle that fear, which has been projected into the future? The only way to know that is by knowing your strategy edge. And the strategy edge is never on a single trade. It's always cumulative trades that will give you your strategy edge, and which is what we talked in Traders Toolbox. And the cumulative edge is always based on whatever strategy it is, your total gross profit overriding your total gross loss, which gives you a net profit excluding your broker commissions. Regardless whether you're retail, professional, or institutional trader, this is the bottom line in the end of every strategy. Okay, so that is the strategy edge. Okay, that's where the fear comes from. When you don't have a strong strategy edge and you don't know intellectually why it should win in the long run. The second reason for fear, traders, is basically the what we call the story that goes on in your mind. Okay, so for example, when the strategy edge is not very clear in you and you don't have conviction in that, then certain stories are then triggered in your mind, which is, oh, we already had 3 losses in the past. I don't have much confidence to put on this trade. I think this one is also going to make a loss for me. So why don't I just cut my profits early and come out of this trade? So rather than probably earning £2,000 on it, you just earn £200, which is not enough for you to override your total gross loss in the past or even going into the future. So the story, and the stories, where do they arise from? Usually they come from the past. It can even be from the beginning of your childhood, even sometimes, rather than even just from the most recent trades that you've lost. Or it can also be projecting into the future, which I just gave you an example. Let's say if you're up about £300 in this, you might just say, hey, you know what? I've already lost 3 losses. I just want to get some profit and I want to get out of this as soon as possible. You see? So the stories usually in the past, coming from the past, or into the future, is what makes the fear come into the stories. And other stories, of course, which are from the past and from the future, it can be anything from your childhood scars that you've had, which is now projecting into how you feel about money as well. Okay, so that is the story. The other thing is, of course, other stories, of course, that we can look into is like you're not good enough, I can't do this. Is this really for me? All these kind of stories, but eventually will relate to this in a trading scenario. Okay, create the fear. The last thing is, traders, is the state of your mind, which is what creates the fear. If the state of your mind is not the peak performance state, which is what Market Blues is meant to create for you, if it is at a low performance state, then what happens is your mind will be either in the past or in the future. And as you and I know, when the mind is either in the past or the future, you wouldn't get optimal efficiency and productivity in the trades that you place. So therefore, where should the mind be to overcome this? It should be in the present moment. That's why somebody once said the present moment is known as the gift, isn't it? So the present moment is what will help to keep us, when our mind is in the present moment, that will help to keep our state in the high performance state. But when it's not in the present moment, when it's stuck in the past or the future, your state becomes low state, and that also causes a higher chance for fear to come across as well. So that is another reason for fear. Low performance state and your low mental state, which creates that fear to come when you are riding a trade. That's why you've got to be really, really a high state when you are trading. So these are the 3 reasons which creates the fear. The strategy, okay, you must know your strategy with an age. Okay, that's what creates the fear. If you do not know, that's what creates the fear. The other thing is the story of the past, the future, and the state is your mental state at the moment. Okay, so how do you overcome them? Of course, there will be the opposite of these reasons. In the next Market Blues, I will look into this much more in detail. Okay, at least now you know the reasons for what creates that fear. And that's why, remember, when we mentioned in the beginning of false expectations appearing real, they are false because they come from the past or the future. They cannot be in the present. That's why they have called it false expectations appearing real. Okay, good. So now let's go on to the markets, as we always do in Market Blues, and let's see what's the updates for the week ahead. Right, dollar Swiss, as you can see over here, it's a top to bottom move. Currently now, price structural failure has taken out the last low over here. Open equity diminishing to the downside. I would say some small retracement to the upside before probably continues on with its trend in the daily, but do be aware on the higher time frames as well. If I were to take a look at the higher time frames very quickly, that's still in an uptrend. It could just be a retracement move on a phase 2 and it could revert back. So if you do want to take any counter trend trades in relation to the lower time frame, but in trend alignment with the higher time frame, be do cautious of the time factor. Okay, right. Dollar yen, on the other hand, open equity diminishing to the downside. Okay, there will be higher chances for it to turn as well. GBP USD, on the other hand, really strong bullish upward move over here, as we can see. And right now it's on an uptrend with a price structural trust to the upside is what we are having over here. Okay, open equity still, I would say, is diminishing to the upside with the big distribution bar coming, where probably most of the smart money has sold off the orders. Going on to euro dollar, again, there's a nice good distribution bar here. Still strong upward move. On the weekly, it's aligning to the phase one move. I would say for those of you who are in the long move, do trail your stop losses tight as the open equity is diminishing to the upside. Aussie dollar, on the other hand, you can see that it's still towards the upside as of today. Open equity is still more to the upside as it just took out this continuation pattern. But however, do get tighter on your stops as well. GBP yen, on the other hand, as you can see over here, open equity more to the upside, I would say, even though we don't have a confirmation bar yet. This is still a turning point. I would still be cautious until I get a confirmation signal to buy. Once we get to buy, then we can trail our stop losses a bit more tighter. Euro yen, on the other hand, open equity, I would say more to the downside. Quite a bit of a consolidation here, struggling to go to the upside. Open equity diminishing to the upside, so I would say more open equity to the downside. Coffee, on the other hand, open equity diminishing to the upside. And if there is some signs of turning point, I would take it to the down. Dow Jones, it is showing some signs of resistance to the upside over here. If it's a slower momentum move, there will be divergent signals on the MACD and the stochastic, highly probably. I would say more open equity to the downside. But of course, technical levels at where you take the short is very critical. Silver, on the other hand, I would still say open equity more to the upside with an uptrend from this consolidation happening here. This, I would say, is just some profit taking, but this level is the first one to see if it just push up higher. GBP yen we've looked at, and finally a dollar index, the basket of currencies that the dollar is contrasted against. Open equity diminishing to the downside, structural failure over here. I would look for some retracement to the upside at some point at technical levels. All right, so that's all from me on this market blues section. You would have seen how we are setting up for the week ahead in terms of all of these instruments, and also do take some time to reflect on the 3 reasons for fear. And on the next market blues, we will be looking at how to overcome fear. Okay, very important, so that we keep our state always at peak performance, so that we can achieve our strategies and execute our strategies consistently to get our equity curves to push higher and higher to positive terms. All right, so that's all from me on this Market Blues video. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.